All right, everyone, welcome to our introductory video on trend identification. In this video, we're going to be taking a look first at trend lines, what they represent, a little bit of conceptual basis for them, how they are identified, how they are drawn, and then we're going to go look in the markets, look at practical examples, and apply that information. So, like always, let's hop out of the charts. All right, so our goal here is to figure out what exactly a trend line is. Now here we've got a table in front of us, and on the left we have traditional support and resistance, and on the right we have trend line. So our goal by the end of this is to answer the question, what's the trend line? And we're going to start over here on the left-hand side by drawing a traditional horizontal support and resistance level. So this level right here is a horizontal support and resistance level. Now, how does price react at a support and resistance level? Well, let's say that we are under the level, price is under the level, then that level will hold as resistance. So here the level is holding as resistance, pushing price down, and then when price does breach through the level, that level will then turn to support, price will come back to retest, it will hold a support, and price will continue on. So that is typically how traditional horizontal support and resistance works. Now how a trend line works, so let's draw a trend line now. So a trend line may look like this. And the way price will work on a trend line will go up, it will come down and bounce off the trend line, go up, come down and bounce on the trend line, go up, come down and bounce on the trend line. And then finally, the trend line will break. And when the trend line breaks, price will come back up to the trend line, retest it, and then continue on in the other direction. So if you think about what just happened, they're essentially the exact same thing. Horizontal support and resistance and trend lines function in the exact same way. It's just that trend lines are diagonal. They are angled. They are not perfectly horizontal. As you can see, they act as support when price is above them, and then they act as resistance once they are broken. Same way that our horizontal level acts with price, act as resistance and then become support. And of course this works in both ways. So now when price is going down, you have a descending trend line. When price reaches this retest, it will hold a support and price will continue on, just as it did here with the horizontal level. So the way that I want you all to understand what trend lines actually are, the answer, if anyone asks you what a trend line is simply diagonal support and resistance. That's it. That's all a trend line is. So this is our answer to the question, what is a trend line? So now that we know the core basics as to what a trend line is and kind of how it works, we need to understand conceptually why they form so that we have confidence when we use them and put real money on the line. All right, so now our question is, why do trend lines form? Why should we rely on them for our analysis? So what we're going to do is we're going to just draw an uptrend here for this example. So here's our uptrend. All right, and then we're going to draw our trend line for this uptrend. All right, so let's connect these here. Okay, so to understand why trend lines form, we need to understand a little bit about market psychology, supply and demand, and market participants. Right now, we can conclude that the market is bullish. So when we conclude that the market is bullish, what that means is that key market participants, people with enough equity to move the market and actually impact price, are long on this pair. Now, if you open up the market and you're looking to get in on this market and capitalize on the bullish move, here's my question to you. Do you buy right here when price is high? Price is high, overpriced, expensive, etc. So up here, this is not the place to buy. You don't want to buy when price is overinflated, overextended, and expensive. Nobody goes to Walmart and buys the TV once it's been marked up. Everyone goes to Walmart and buys the TV once it's on sale. Now, there are a lot of deep economic concepts and principles that drive this human behavior, and you see widespread applications of this across all economic sectors. You even see it in holidays, and you see it played out with events like Black Friday. Now, I don't know if you've ever been to a Black Friday event or a Black Friday sale, but people are willing to kill other people. They're willing to slap babies for 20% off a microwave. Absolutely irrational behavior, all just for a quote-unquote fair or discounted price. Nobody wants to pay full price. Now, this is not necessarily some kind of wise, deep understanding. Most people can rationalize that the general public would want to buy something at a discount rather than paying full price. But when we start talking about institutional investors, the people that actually have the equity to control market price and move and impact the market, these people will only buy at a discount. It's not a want for them. It's a requirement, because these people have so much money on the line, that buying at a discount means saving billions of dollars on just a single transaction. So when we talk about the financial markets and we're looking at cases of supply and demand, it's important to understand that these big players, these people that are actually controlling and moving the market, they have no choice but to get a low price. There's simply too much money on the line. 20% of $100 is only $20. 20% of $100 billion is $20 billion that it would cost them to not wait for the discounted price. So when we look at trend lines, what we're really seeing is institutional investors coming in at a common discount rate. So if you open up a chart and you see that price is up here, the institutional investors are looking at this and thinking, okay, I need price to come back down for a discount so that I can buy. And this ascending trend line support here typically forms because the discount rate that many of these institutional investors are looking for is usually around the same rate. And when you have similar pullback ratios, you form a nice solid trend line that you can rely on to manage trades with, as well as help you identify the overall market trend. Because we understand that big players are the ones that actually control the market trend, here's another way I want you to understand what a trend line really represents. So let's say that over here, we start off and price is at 81.0. And then let's say that some big institution has a total of $50 billion that they need to get rid of. So let's go ahead and write down $50 billion that they need to get rid of. So let's make this a little smaller here. All right. So they need to get rid of $50 billion. So what they're going to do is, let's say they get rid of 10 billion of it right here. So roughly 10 billion they get rid of right here. Now when this happens, so when they place this order right here, it's going to push price up. And now when price is all the way up here, they're not going to place another order. What they need to see is they need to see price pull back so that they can place another order for, let's say, another $10 billion. So they want to get rid of another $10 billion, but they need a discount to do so. So what they'll do, and they know that they've got to do this. So let's clone, and then so 1, 2, 3, and then let's move this up here as well. And then here's our final order. So they know that they need to do this a total of 4 more times to fill the entire $50 billion worth of order. So what they'll do is they say, okay, I'm going to come in at a 60% discount rate. And they're only going to fill their orders at the 60% discount rate. So I want you to imagine that over here on the right-hand side, when we looked at this bullish market, what you're actually seeing is 60% discount rate buy order. Okay? Right here. 60% discount rate buy order. Right here. 60% discount rate buy order. And this is what's driving the market in its bullish trend. It's supply and demand. They're coming in, filling their orders at specific discount rates that they've agreed upon, and thus you end up with a solid, reliable trend line that's showing you where they're coming in. And so what happens from a conceptual standpoint is when this trend line breaches, we now know that those orders are done being filled. They've now filled their orders. So what will happen is price will come back up. It'll test it as resistance. The market has identified this trend line as a support. So it'll come back up and test it as resistance. And then sellers will enter in and then we'll go the opposite direction. So this is a conceptual understanding for why trend lines form. This is not something that you can see by just looking at a price chart. This is not something that you can just find readily online, but this is the truth, and this is why they work. This is why we use them, and this is why you can trust and rely and have confidence in your technical analysis and understand what it means from a deeper standpoint. And overall, that's going to help you. Having this understanding will help you in your confidence in your trading and will help you make money. So now that we understand what trend lines are, why they form, we need to understand the proper way to draw them. All right, now for the bullish market, we are heading up, of course. So we will do it like this. And then in the bearish market, we are heading down. All right. Now, for trend lines in a bullish market, you need your trend lines to be at the bottom of price. You're going to be connecting the valleys in the market, the lows of the market, the points where market finds support and rises, bounces from the bottom. Those are the connections you want to look for in a rising market. Your trend line will be beneath the price, and we'll explain why in just a moment. Now, in a bearish market, your trend line goes above price. All right. So here in a bearish market, you're looking for the peaks in the market, the tops, the highs, the points where market comes up and rejects. Now, understanding how trend lines form from a conceptual standpoint will help you understand why the trend lines are drawn in this way. But one way that really helped me remember this is to understand why we're drawing the trend line in the first place. So let me ask you a hypothetical question. If we had a trend line, so let's say we're in a bullish market and we had a trend line on top of price. Now, if price were to break through this trend line to the top, retest and continue going, we would still be in a bullish market, right? So this trend line doesn't really tell us much in terms of what the trend is. And by definition, trend lines are used for trend identification. So that doesn't really make much sense to draw it on the top. However, in a bullish market with the trend line on the bottom, if price were to break this trend line to the bottom and retest, where's price going to go? It's going to go down based on our understanding of support and resistance. It'll break the support, which is beneath price, and then it will retest. And when it retests, the trend line will now be resistance, price will fall. So therefore, by definition, in a bullish market, having our trend line beneath price as a support will function to let us know when that trend line breaches, we actually have a change in trend. So it's actually aiding us with the trend identification. So that's one technique that I use and recommend understanding to remember whether you need to draw your trend line below or above. So just remember that. Think about that when you go into the markets and you're trying to figure out what you need to be connecting. Ask yourself if drawing the trend line there will actually help you in trend identification. Similarly, over here in this bearish market, we know that when this resistance breaks above our head, we know that that means that the trend has changed. We are now going to be going bullish based on our understanding of support and resistance. However, if that trend line was beneath us, when price breaks the trend line to the downside, it would retest and simply continue going down. So it doesn't really tell us anything about a trend change. So it doesn't really do us any good in terms of trend identification and alerting us of trend change. So that's conceptually understanding how to properly draw your trend lines. And now we've got enough information to go into the markets and apply it. All right, so here we are on the US dollar Russian ruble on the daily time frame, and we're going to go ahead and drop a vertical line over here and just work our way from the left to the right, identifying the trend lines in the market, seeing what they actually look like in the market, and getting into some of the details about how to specifically connect different peaks and valleys to get the most accurate trend line possible for your trading, which will become very important in later lessons and in your overall independent trading. So let's zoom in over here on the left-hand side. And we're going to just start with this area right here. So the first thing that we're going to note is that we've got a peak in the market right here. Okay, so let's go ahead and call this out. This is a peak in the market. All right, now we fall down here and we come back up, and then here we fall again and we see, okay, we've got another peak in the market right here. So here's our next peak. And similar to support and resistance, how you need at least two identifiers to actually mark your horizontal level. When it comes to trend lines, you also need at least two identifiers to mark your trend line. So if you notice over here, we are in a bearish market. How do you know we're in a bearish market? Well, real simple. If you look on the left, we start up here. If you look over on the right, we end up down here. You go from here to here, that's down. That's a bearish market. No need to overcomplicate it, okay? We're in a bearish market. In a bearish market, we're interested in trend lines on top of price. So here we are, and we're going to connect these two peaks to get our trend line. Okay, now let's talk about this connection because this is really important. So everyone's got different ways for drawing their trend lines, and 95% of people who are teaching it are wrong. So if you want to really make money, listen up. This is important. This is very important. When you draw your trend lines, you need to know the outermost boundary of your diagonal support and resistance. The outermost boundary. So first of all, over here on the left, right here, this needs to connect to the uppermost peak, right here, the wick, top of the wick. Okay, and then right here, I need this to connect to the top of this wick right here. So I have the outermost peak. All right, so I'm going to adjust it to that. This is incredibly important, and there will be minor exceptions to this rule, and we'll look at more examples in other videos of when that happens. But in general, this is how you properly draw your trend line. When you draw your trend lines in this manner, you know for sure that when price breaks this, it's broken the outermost boundary, the outermost support or resistance level and you can for sure rely on the fact that you are looking at a potential trend change. So now, notice how when we connect these peaks, what happens when price gets back up? We fall again. And then price comes back up right here, we fall again. And then remember how when we discussed support and resistance horizontally, we discussed how we'd like to see that it takes strong momentum to break through the level. It lets us know that that level is indeed strong and something that we can rely on from a fundamental standpoint. Here we have a strong candle breach right here, and then look what happens. Real simple, price strong breach, retest, held as support now, and then off we go. All right, real simple. So very similar to horizontal support and resistance, it's just that we're now turned diagonal. So here is our reaction point right here. We can get rid of this arrow. All right. So let's be comprehensive here and mark these. The slower these videos are, the better, because it just ensures that there's no questions left. Breach, breach, and retest. All right. Now another word for peak, we keep using the word peak so that everyone understands that these are the highs of the market that are creating this trend line here in this downtrend. But another word for all of these is what? Resistance. This is the market's diagonal resistance. And when we breach and retest down here, it becomes what?